Welcome to the AI-based forensic bar-level fingerprint pattern recognition trading system. The project value proposition. What if you could see market opportunities that others can't? Patterns and signals hidden within up to billions of data points that predict with remarkable accuracy where the market is potentially heading next. For decades, the prominent financial institutions and hedge funds on Wall Street have had a massive advantage. They have deployed teams of mathematicians to develop their algorithms, data scientists to understand the market data, programmers to write the computer software, financial traders to work the market, and invested billions of dollars in high-performance computing hardware, all to analyze and manipulate the market at a scale no small fund or individual retail trader could match. But now, as a result of advances in desktop computing, network bandwidth, and artificial intelligence, that advantage is crumbling. And it's happening at the perfect moment. Right as we enter what many are calling a new golden age of American economic and technological transformation. First, I want to dispel the typical skepticism that you, the viewer, may feel after hearing so many similar claims from other presentations. To truly understand my approach, I'd like to share a perspective that frames how my system operates within the Wall Street market and finance ecosystem. In the early 1980s, during my 10th grade biology class, I learned about 4 fundamental ecological or symbiotic relationships that organisms develop in nature. They are parasitism, competition, commensalism, and mutualism. Parasitism. An organism benefits at the expense of another. For example, tapeworms living inside a dog's digestive system, the parasite gains nutrients while harming the dog. Competition. Both organisms are harmed by the relationship as they compete for limited resources. Think of 2 dogs competing for the same bone or attention. Commensalism. One organism benefits while the other is neither helped nor harmed. A remora fish attaches to a shark, getting transportation and food scraps while the shark remains unaffected. Mutualism. Both organisms benefit from the relationship. Bees pollinate flowers. The bee collects nectar while the flower gets pollinated. Now let us switch gears from biology to finance and make the analogy. Traditional finance has primarily operated as a parasitic or competitive ecosystem. Large institutions often profit at the expense of retail traders' classic parasitism. Meanwhile, traders fight against each other for limited profits in zero-sum competitions. My forensic fingerprint pattern recognition system introduces a fundamentally different trading model. With other retail traders, I designed the system to create mutualism. The clients benefit from the system's pattern recognition while simultaneously contributing to market movements that create additional patterns the system can identify. It's a virtuous cycle where success breeds further success. But what's truly revolutionary is the relationship with the major institutions. I engineered a model where our system benefits from the patterns and movements created by Wall Street institutional banks and hedge funds, while our activities remain too small to affect or disrupt their operations. Think of it like remora fish that attach to sharks. The remora gets transportation and food scraps while the shark remains unaffected by its presence. My system essentially rides along with the massive waves created by institutional movements without fighting against them. This ecological framework for understanding Wall Street represents a profound shift in trading philosophy. I am not claiming to beat or outsmart Wall Street institutions with vastly more resources. That's a losing battle. Instead, I recognize my place in the Wall Street ecosystem and position myself, and clients, to thrive within it by understanding its natural patterns. The key insight is that my system doesn't need to disrupt institutional strategies to be successful. The more predictably these institutions function according to their established patterns, the more effectively my system can identify and capitalize on these movements. Hello, I'm Patrick Michael O'Leary. After 35 years of post-college experience in business and technology, including a successful exit from an early 90s dot-com company sale, which some industry experts have called the genesis of today's social media, I've developed a solution that's about to level the playing field in trading. In general terms, it's an advanced AI-based market fingerprint recognition system that, depending on the number and granularity of the time frames and length of historical data, uses upwards of 61 billion data points to identify high-probability trading opportunities. In the next few minutes, I'll show you why this new technology represents such a tremendous opportunity, why the timing couldn't be better, and how you can be part of what's coming. The system generates what I've termed a forensic bar-level market fingerprint by analyzing over 100 quantitative and qualitative indicators, combined with specialized strategic approaches, producing more than 350 distinct market conditions, which I designate as flags, for every price action bar across multiple timeframes simultaneously. Leveraging up to 2 decades of comprehensive historical data, depending on the financial ticker. Moreover, my model features complete modularity and configurability, allowing me to add, modify, activate, or deactivate indicators of any origin, whether publicly available or proprietary, with precision targeting down to specific instruments and timeframes. This flexibility enables the AI model to undergo strategic retraining or enhancement, continuously adapting to the sophisticated chess match played out by institutional banking entities. For example, with one stock instrument or ticker, such as Facebook or Google, on 3 higher timeframes over 5 years, my system has over 110,000 data points. Now on the other hand, an index or commodity, such as the S&P 500 or crude oil, being scalped across 6 lower timeframes over 20 years, my system has over 61 billion data points. In either case, a scale of analysis that was simply impossible for anyone outside the largest Wall Street institutional banks until very recently, all as a result of the AI revolution sweeping many business and technology sectors. The real breakthrough came with the development of a proprietary model that uses the price action and the market conditions mentioned earlier. In short, I identify key price actions throughout the history of an instrument, or ticker, correlated with these logical fingerprints. Then, this trained AI model recognizes these market fingerprints in real time as they form on the chart and can generate potential trade entry and exit signals. This isn't just another indicator or trading system, it's a fundamental reimagining of market participation. For decades, Wall Street's identity was forged on chaotic trading floors, a turbulent ocean of brokers in vibrant jackets frantically waving papers, shouting orders, and racing against both the merciless clock and determined rivals. This was the financial world's ultimate battleground, where immense fortunes materialized and vanished through split-second human judgment and physical execution. Today, those once iconic trading floors survive merely as television backdrops and tourist curiosities. The authentic reality of modern markets pulses within pristine data centers, where immensely powerful servers execute millions of trades per second through sophisticated algorithms. Recent industry research confirms that over 80% of all trading volume across major markets now flows through algorithmic systems, with estimates reaching a staggering 90% in certain instruments. This revolution ignited during the early 2000s, catalyzed by transformative regulatory shifts like Regulation NMS and remarkable breakthroughs in computing power. What once belonged exclusively to multi-billion-dollar institutions has steadily democratized. Computing capabilities that remained prohibitively expensive just 15 years ago now empower nimble small firms, sophisticated individual traders, and entrepreneurs like me. Today's market operates as a complex living ecosystem where algorithms continuously engage with other algorithms, generating distinctive patterns and movements that skilled observers can track, analyze, and predict with unprecedented precision. Major financial institutions commit vast resources to this algorithmic arms race, yet their substantial size inevitably creates telltale signatures in market behavior. This transformed landscape unlocks extraordinary opportunities for systems like mine. Rather than futilely competing head-on with institutional algorithms, my system identifies and exploits the patterns these giants create. Like marine remoras attaching themselves to powerful sharks, it establishes a perfect commensalistic relationship, benefiting from their movements without affecting the larger predator. My AI-based forensic fingerprinting method fundamentally revolutionizes trading philosophy. Instead of challenging institutional giants in a battle you cannot win, it acknowledges their dominance while skillfully carving out a viable ecological niche within the same dynamic ecosystem. As computing power becomes increasingly accessible and AI tools grow exponentially more sophisticated, we're witnessing the emergence of next-generation systems capable of decoding market movements with extraordinary precision. In this new reality, success no longer demands the massive resources of a global banking institution. It requires innovative pattern recognition and the ability to interpret the digital fingerprints left by major market participants. To understand my approach to trading in these massive markets, let me share a perspective that will completely transform how you see trading forever. The daily trading volume on the 4 major index futures alone reaches a mind-boggling 750 billion. That's not just a number on a screen, it's an entire ocean of money flowing through 4 financial instruments every 24 hours. Now let's bring this into crystal clear focus. An Olympic-sized swimming pool contains approximately 660,000 gallons of water. If that entire massive pool represents 750 billion in daily trading volume, then 1 million, a fortune that would instantly transform most people's lives forever, equals less than 1 single gallon of water, or 15 cups, within that vast pool. This reality is precisely why I've abandoned the ego-driven approach of trying to beat or outsmart the market. Thinking that 1 gallon could somehow alter the powerful currents of an Olympic pool isn't just optimistic. It's physically impossible and mathematically absurd. Instead, I've evolved to function within the market ecosystem exactly like a remora fish attached to a mighty shark. Rather than fighting hopelessly against the powerful institutional algorithms driving major market movements, I've learned to recognize their patterns with extraordinary precision and position myself strategically to benefit from their unstoppable momentum. The truly successful traders intuitively grasp their role in this complex ecosystem. They conserve their valuable energy, never foolishly attempting to move the market. Instead, they develop the specialized skills to read it accurately and establish their perfect ecological niche within it. This fundamental shift in perspective from combating market forces to cooperating with them distinguishes sustainable trading strategies from those inevitably headed for catastrophic failure. So when I tell you my system consistently targets $1 million daily, understand this isn't a boast, it's simply a realistic assessment based on market mechanics. We are essentially extracting less than 1 gallon of water from an Olympic-sized pool, a quantity so insignificant that market giants won't even detect our presence, yet substantial enough to create extraordinary opportunities for those who truly understand their place in this vast financial ecosystem. However, you could make a case that the evaporation of the water from the pool is analogous to all the trade entry-exit transactions, spreads, and slippage fees. An Olympic pool has over 1,000 gallons of water evaporated each day, just as the market has over $100 million evaporated from the market liquidity from these transaction fees. This is 100 times our target. Thus, we are completely under the institutional bank's radar. Hence, this is precisely where my system thrives, not battling against the algorithms that control trading but developing an intricate understanding of their behaviors and tendencies. Even with my minimal market footprint, I will implement an additional layer of operational security through a sophisticated distributed trade execution system. In nature, many prey species have evolved remarkable strategies to avoid detection. Consider how schools of sardines disperse their formation when threatened, or how certain butterflies develop random flight patterns specifically to confuse predatory birds' tracking algorithms. My system employs similar principles of strategic dispersion. Rather than executing all trades from a single source, which would create a recognizable pattern, my trade signals are distributed simultaneously to multiple independent workstations across different geographic locations. These notifications reach individual TradingView terminals through secure webhooks, with each recipient executing trades through different brokers, from unique IP addresses, and in varying volumes. This approach creates a form of trading camouflage. Instead of appearing as a single, trackable entity in the market, our trading activity is dispersed across dozens of independent execution points. To institutional surveillance systems designed to detect and exploit detectable patterns, these distributed trades appear as unrelated, random market activity. Consider how modern military aircraft employ electronic countermeasures to confuse enemy radar. By projecting multiple false signals and dispersing their electronic signature, they can operate virtually undetected. My distributed execution system functions on the same principle. It diffuses my trading footprint across the market landscape. The institutional algorithms that dominate today's trading environment employ sophisticated pattern recognition to identify and exploit predictable behavior. They're constantly scanning for recognizable volume signatures, recurring execution patterns, and consistent trade timing. My distributed approach ensures that I never present a coherent target for these predatory systems. This isn't just about staying hidden, it's about intelligently adapting to the market ecosystem. Just as successful organisms in nature evolve strategies to avoid predation, successful trading systems must develop mechanisms to prevent exploitation by larger, more powerful market participants. The resulting execution pattern creates no centralized volume surge, shows no consistent IP or broker signature, and prevents institutional surveillance tools, the same ones designed to track dark pools, quote stuffing, and iceberg orders, from identifying or targeting my activity. In essence, I have designed a ghost in the machine, present and profitable yet virtually undetectable within the vast ocean of daily market transactions. I've been working in technology long enough to recognize when multiple forces align to create a once-in-a-generation opportunity. That's exactly what's happening now in so many business sectors. First, the technological barrier has fallen. The computing power that once gave Wall Street institutions an insurmountable advantage is now available at a fraction of the cost. Second, we're witnessing an unprecedented transformation in business and economics. The United States is shifting its policies to focus on domestic manufacturing, domestic energy production of crude oil, nuclear, clean coal, natural gas, and other renewable energies, needed for new construction for factories and artificial intelligence. This results in the reshoring of supply chains, which collectively will lead to higher GDP and economic independence. This transition is creating substantial market volume and volatility, the perfect storm for my concept, which is designed to capitalize on these market movements in this economic environment shift. What separates my approach comes down to 4 critical elements. First, the scale or the amount of data analyzed. Most trading platforms, such as TradingView, MetaTrader, or typical mobile apps, simply don't process enough data. These platforms look at too few indicators across too few time frames across too few historical bars. I have often wondered if they were designed to make the small firm or individual retail trader fail. My system analyzes over 350 different market conditions for each price bar across multiple time frames over many years of historical data. Second, my proprietary algorithm doesn't just identify patterns that scripting languages like PineScript do, it maps them to what potentially happens next, based on my algorithms and the market fingerprints in the trained AI model. Third, execution precision. My system will generate potential trade signals that can be delivered directly to a trading platform via webhooks or APIs, eliminating execution lag. Fourth, future updates will include the ability to focus on or filter out various extraneous information or world events from the trading signals. This will enable you to filter out or focus on events such as pandemics, wars, terrorist attacks, election transitions, or changes in governance and associated policies, taxes, tariffs, etc. In short, it is often said that the whole is greater than the sum of the parts. The modern technology of the Python programming language and artificial intelligence combined with these 4 elements creates something far greater than any one individual component. As a result of AI, the algorithmic trading market is projected to exceed $30 billion by 2028, growing at a compound annual growth rate of over 10% from 2021. My algorithm and model are designed to analyze and generate potential signals for major indices like the S&P 500, technology with the NASDAQ, the Dow Jones Industrial Average, key commodities like precious metals, such as gold and silver, the energy sector with crude oil or natural gas, major forex pairs like the euro-dollar or the dollar-yen, and even cryptocurrencies like Bitcoin will also work. The post-pandemic surge in retail trading activity, with over 10 million new brokerage accounts opened in 2020 alone, has created unprecedented demand for professional-grade trading signals for the average trader. Yet, there is a significant shortage of registered, credible advisory services and consultants in the algorithmic trading space. To be compliant with the SEC, you need to have a Series 65 license, be a registered investment advisor, and have commodity certification. As a result of the AI explosion, there was a shortage of such talent. My model is perfectly positioned to fill this shortage. Artificial intelligence is here to stay. Many large tech companies have made their AI research publicly available, enabling other industries such as travel, healthcare, engineering, and transportation to leverage this research and develop products tailored to their respective needs. Facebook has invested tens of billions of dollars in AI infrastructure. In 2023 alone, Facebook purchased approximately 350,000 NVIDIA H100 GPUs, each costing over $35,000, and spent over $15 billion on AI infrastructure. In 2025, NVIDIA announced an investment of $500 billion in the United States to manufacture all its AI GPU cards domestically. In recent years, Facebook's cumulative investment in AI infrastructure has exceeded $30 billion. Google has also been a large investor in AI infrastructure and contributor. To date, Google has spent over $100 billion building out its AI capabilities, including data centers, specialized hardware and software platforms. We can also expect to see contributions from other large big tech companies such as Apple, Amazon Web Services, Microsoft, Oracle, SoftBank, Tesla, and DeepSeek very soon. Collectively, these tech giants have published groundbreaking research papers, released open-source software frameworks, and shared pre-trained AI models that serve as building blocks for specialized applications similar to this project. One concern that constantly comes up is security of both personal and national data, and the privacy of clients' data when using software from these big tech companies which are notorious for data mining. For example, DeepSeek is made by a company in China which has been in the news because of the use of the product and the data mining and privacy intrusions that took place. Facebook and Google have also been caught doing the same. Rest assured, your data's security is ironclad. My advanced system architecture isolates all products and pre-trained AI models within dedicated virtual machine containers using completely non-routable IP addresses. This military-grade security approach creates an impenetrable barrier preventing any unauthorized connections to big tech networks or servers, eliminating both corporate data mining risks and sophisticated hacking vulnerabilities simultaneously. This fortress-like local implementation of cutting-edge AI models, providing absolute protection for sensitive client data and valuable intellectual property, requires next-generation computing infrastructure and software solutions. While this represents a premium investment, it delivers the dual benefits of uncompromising security and market-leading performance that discerning professionals demand. This AI technology explosion of today is like the California gold rush of 1849. Or the internet.com boom of the 1990s. Take a look at this graph closely. My company started back in the late 80s and was effectively doing the equivalent of Web 2.0 e-commerce transactions long before any of these other companies existed. Hence, some experts say my company was the genesis of today's social media. Now, no fundraising pitch would be complete without an objective SWOT analysis. So let's look at the strengths, weaknesses, opportunities, and threats of the project. Project strengths. 1. Leveraging public AI research. My system builds directly on the over $150 billion in AI research invested by tech giants, allowing me to focus on specialized trading applications rather than solving fundamental AI problems. 2. Proprietary bar-level fingerprint. My algorithm uniquely provides a competitive advantage that combines AI with market-specific expertise. 3. Computational edge. On one ticker, my model will process over 61 billion data points, creating a level of pattern recognition that is impossible for human traders or simpler systems. 4. Multiple domain expertise. Rare fusion of technical AI knowledge with practical trading experience and entrepreneurial success. 5. Multi-time frame approach. Simultaneous analysis across multiple timeframes provides a deeper insight than single timeframe systems. 6. Clear monetization strategy. A revenue-sharing model that creates alignment between clients, the company, and investors. 7. Proven track record. Leadership with demonstrated exit success. Project weaknesses. 1. Capital requirements. I need an initial investment for the necessary infrastructure and the remaining software development. 2. Regulatory compliance. Financial advisory services require careful compliance management and licensing. 3. Technical scaling challenges. Processing massive datasets demands sophisticated architecture and optimization. 4. Market dependency. The system performance is optimized for volatile market conditions. 5. Time to market. Obtaining necessary licenses and approvals creates timeline considerations. Project opportunities. 1. The AI gold rush. We are at the beginning of an AI revolution comparable to the 1849 gold rush or 1990s dot-com boom. 2. Democratization of trading technology. Capabilities once limited to institutions are now accessible to smaller players. 3. Growing market. Algorithmic trading projected to reach over $31 billion by 2028, over 10% CAGR. 4. Economic transformation. Current reshoring and supply chain shifts are creating ideal market volume and volatility. 5. Retail trading surge. Since 2020, there have been 10 million new brokerage accounts opened. 6. An advisory service gap. Limited number of registered, credible algorithmic trading advisory services. Project threats. 1. Competitive landscape. Well-funded fintech startups may be pursuing similar goals. 2. Regulatory evolution. Potential changes to algorithmic trading rules or signal service requirements. 3. Market condition shifts. Possibility of extended low volatility periods. 4. Technical obsolescence. Continuous innovation is required to maintain a competitive edge. 5. Economic factors. The broader economic conditions can impact a trader's appetite. SWOT analysis conclusion. This SWOT analysis highlights my unique position at the intersection of 3 significant trends. 1. The democratization of AI research by tech giants investing billions. 2. The transformation of the American economy creates ideal trading conditions. 3. The surge in retail trading participation is creating demand for sophisticated tools. While I face challenges in development and regulation, my ability to leverage public AI research with specialized trading expertise positions me to capture significant value in this emerging space. The window of opportunity is now, as I am ideally positioned to build on the foundation laid by tech giants' massive AI investments while applying my unique trading fingerprint analysis to a specific high-value industry sector. Project funding requirements. I have successfully built the core framework and libraries of over 100 quantitative and qualitative proprietary indicators and other strategies. But I have reached the limits of my current computational resources. The project requires an investment of $5 to $10 million across 5 structured development phases, delivering demonstrable milestones that establish clear product-market fit and a pathway to investor returns. 25 years ago in 2000, my .com raised over $11 million in 2 rounds. Hence, with time inflation adjustments, this amount is a relatively small funding requirement compared to typical rounds of capital from investors. Phase 1. Infrastructure and Foundation. In the first 6 months, I will deploy enterprise-grade hardware and software infrastructure for processing my algorithms and the trained AI models securely to establish a robust data processing pipeline. Phase 1 will also focus on regulatory compliance and licensing, which requires a training bootcamp to pass the licensing exam. Building whiz-bang software systems is great, but it is equally important to be legally compliant with all the SEC regulations for this specific segment in the securities space. Thus, to establish a comprehensive regulatory framework for the entire project lifecycle, the Series 65 RIA and CC training will also be done in this first phase. In addition to all the regulatory compliance training, I would also take private training masterclasses from Wall Street insiders to learn about the latest market manipulation tactics used by large institutional banks and hedge funds. This training will be extremely fruitful in further refinement of my algorithm and associated AI model training. Phase 2. In this phase, over 6 to 12 months, I will complete the core AI algorithm training and refinement for the 4 major futures indexes, S&P 500, NASDAQ, Dow, and Russell. Phase 3. Over 6 to 12 months, I will further the AI development and training for other instrument classes. In this phase, I will build and train specialized AI models for indexes, commodities, forex, and cryptocurrencies to further implement my predictive signal generation algorithms. Phase 4. Platform completion and testing over 6 months. I will complete the client-facing platform with TradingView integration, finalize webhook and API delivery systems. Phase 5. Platform market launch over 6 months. At this time, there are no plans to use any funding proceeds for paid advertising until I have a complete understanding of the SEC requirements for such. With that said, given the need for such algorithmic trading tools, I expect this project awareness to spread by word of mouth and go viral. Revenue model. A structured paid or tiered revenue sharing model that aligns incentives between clients, the company, and investors will be implemented with complete SEC compliance. Investor return. With a clear return structure, investors will participate directly in the platform's profit. We will implement a 50/50th profit share model until investors secure a complete 1x return on their initial capital. However, my unique competitive advantage lies in providing unlimited upside potential, far beyond traditional investment models. By granting investors' financial teams direct access to my proprietary trading signals, I create a perpetual value mechanism that enables virtually unlimited return multiples without additional capital requirements. Investors have a clear exit opportunity with a significant return. Based on conservative adoption models, we project a return on investment time frame of 24 to 36 months. I need to point out that the investors of my previous .com received a 2x return in only 12 to 16 months. First-round investors will have the ability to engage with the company again in future rounds if needed, or as a client. You're not just investing in technology, you're investing in leadership and execution. My background uniquely positions me to deliver on this vision, a founder and the CEO of Matchmaker.com, which sold to Lycos for $44 million. Over 35 years of C-level management, IT and programming experience, an executive MBA from Hofstra University with a 3.95 GPA, Bachelor of Science in Electrical Engineering and Computer Science from NYU Brooklyn Polytech, multiple professional certifications, including CISP, CEH, and CHFI, expert witness engagements in federal court for major technology companies. This rare combination of technical knowledge, business acumen, and financial market expertise positions me uniquely to deliver on the promise of this advanced trading system. We stand at a remarkable intersection of technological capability and economic opportunity. The barriers that once gave major institutions an insurmountable advantage have fallen just as we enter a period of economic transformation that's creating ideal trading conditions. My advanced AI-based market fingerprint recognition system represents the democratization of institutional-grade trading technology, bringing capabilities once reserved for elite firms to individual traders and smaller funds. The question isn't whether AI pattern recognition technology will transform trading, it's already happening. The question is, who will lead this transformation and capture the value it creates? While we are in the golden age of AI technology, now is the perfect time to invest in AI trading. The patterns are there, hidden in plain sight. My technology reveals them. The opportunity for you is now. If you see the potential in this opportunity, I invite you to reach out for a more detailed discussion. I look forward to discussing how we can reshape the future of trading together. Thank you for your time. Here is my contact information.